Welcome to this week's market drama. The S&P 500 this past week was down 0.4%. NASDAQ was down even more, down 1.3%. They're both roughly up 5% year to date. Oil was the outlier. It was up 1.8%. It is now up 9.2% year to date. So what drove market action? It was inflation data that came out for January, CPI and PPI data. CPI is the consumer side of the equation. Let's start there. Headline CPI came in at 3.1. The expectation was 2.9. Core CPI, which excludes energy and food, came in at 3.9. The expectation was 3.7. Right? So inflation came in a little bit stickier than expected. That kind of spooked the market. Why? As I mentioned a number of times every week here, the market is happy, right? That's why we're near all-time highs, with the idea of inflation coming down, which will allow the Federal Reserve to cut interest rates. Now, that CPI number, what it did is it repriced the market's expectations of how many times the Federal Reserve will cut this year. So prior to this week, you just look 2 weeks back, the market was pricing in 5 cuts this year, starting in May. After Wednesday, it is now pricing in 3 cuts this year, perhaps starting in June and instead of in May. So this adjustment, is what drove the market to come down. We'll see as we continue to get data right on the inflation side if this is kind of the new status quo of what the market expects. Something that I saw Jim Bianco write on this topic that I thought was really interesting is that he's on the camp that what the market's not currently pricing in, if you will, is that the new normal for inflation is not going to be 2 to 3, is going to be more like 3 to 4%. And as a result of that, I call it like neutral, right? In the old school cars where you had manual stick drive, right? Neutral for the Fed, instead of being then closer to 3 to 4, it might be closer to 4 to 4.5 for neutral, right? And his point is, if that is the case, if that is kind of the new reality, the new normal for inflation, then the Federal Reserve is not, 300 basis points or 3% from neutral. It's more like 1, 1.25, 1.5. And yes, that means that they are restrictive right now and they'll have to lower interest rates, but maybe not as by as much as the market expects in the coming year and in the coming, call it 6-8 quarters. So that's it for this week. Next week, we have the January FOMC minutes to see, in essence, how the Federal Reserve was thinking about inflation, what notes they took when they had the data as of January. We also have PMI data, which gives us kind of a flash look at global economic growth. That's it this week. See you next week.